I'm Jim Dantona with the San Luis Obispo Chamber of Commerce. We've been hearing and seeing a lot of angst and confusion about what to do if you can't afford to pay your rent or mortgage because of COVID-19. As we've all experienced in this crisis, clarity and understanding can be hard to find. But in this instance, we can help provide some clarity on these issues. We've gathered a few experts to help explain current rules, which levels of government are empowered to do what, and steps you can take if you're in need of assistance. Before we dive in more deeply, here's a quick overview of the different people that will be discussing these issues with us today. Dallas Mosier, attorney at Carmel Naccasha, who has a real property law practice, including navigating issues on which government agencies can regulate housing issues, such as foreclosure or evictions. We are joined by Stephanie Barclay, who is legal director at SLO Legal Assistance Foundation, and we'll be discussing protections available to tenants negatively impacted by COVID-19. Donna Lewis is VP of Mortgage Lending at Guaranteed Rate, who will talk about housing issues and remedies on mortgages for property owners. The reason we brought these folks together is that all these pieces might seem completely different, but are interconnected in our system. Whether your issues are as a renter or a property owner, your issues are directly connected through the banks and the governmental agencies that oversee them. To start things off, we have Dallas Mosier, who will discuss the regulatory framework under which SLO County and its cities must work within before we dive into the rental and mortgage specifics. Dallas?
Thank you, Jim. Yeah, we're getting lots of questions from people saying, why isn't the city doing this? Why isn't the county doing this? So it's important, we think, to make sure that everyone understands kind of the regulatory framework that we're operating in. And so the big picture is what we start off as is a lot of people know the saying that the Constitution is the supreme law of the land. And so really what that means is that we have a hierarchy of laws with the Constitution at the top. And although this is simplistic and kind of a narrowing of the issue, we also have the federal government laws that typically will trump state laws, which will then supersede and preempt county and city laws in that order. And so while not always the case, generally speaking, that's how things go. And the reason why this is important is because we do have laws where the federal government regulates banks and where the states also regulate banks. And so because those are areas that are regulated by the federal government and to some extent the states, the local governments are going to be preempted and precluded from doing things such as mortgage foreclosure moratoriums, or halting payments of any sort, or deferring payments, or requiring that these banks do any of these things. So really why we would like the local governments to be able to handle those issues, kind of this having the Constitution as a supreme law of the land and having this pecking order really prevents us from on the local level dealing with those issues. So, a lot of times we're stuck with where does that leave the local governments? And really one of the things is we should make sure that they're not trying to do those types of legislation or ordinances that would get them in trouble for trying to take on areas where the federal or the state government has the authority to do that. And so instead it would be focusing on issues like Stephanie's going to talk about with respect to eviction protections and court actions, or really focusing on keeping people healthy and actually helping them apply for relief or get the relief. And so that's hopefully explains why the local governments aren't really able to dive in and freeze your mortgage. And back to you.
Thank you, Dallas. I appreciate that. And so taking the theory into reality, we have Stephanie Barclay, who is the legal director of the SLO Legal Assistance Foundation, to talk about the current eviction moratorium and resources available to renters. Stephanie?
Thanks, Jim. There have been a whole lot of directives and guidance related to evictions thrown at us over the last month from federal, state, and local governments. It's really confusing to understand them all together and try to figure out what rules apply in any given situation. First off, all evictions are paused from going forward right now until 90 days after the governor lifts the state of emergency. Renters cannot be evicted during this state of emergency except with a court order finding the eviction is necessary to protect public health and safety. Also, utilities can't be shut off due to non-payment during this state of emergency. If you can't pay your rent because of COVID, you need to explain that in writing to your landlord and save a copy. And this can be by email or text. COVID-related reasons include loss of a job or business income due to shelter-at-home orders, and loss of the ability to work due to school closures or caring for someone with the coronavirus. We have a sample on our website that you can download and use to give to your landlord. Our website is slowlaugh.org. That's SLOLAF.org. And your landlord can ask you for medical or financial proof that your inability to pay relates to COVID-19, and you need to provide that. Your landlord's required to keep that confidential. And we also have a sample letter on our website that you can use to give to your employer to fill out as proof of loss of income. None of the current regulations include rent forgiveness, so all tenants should be paying as much of their rent as they can. If you're not paying your rent now because of COVID-19, that rent is going to be due 6 months after the local emergency period ends. Under the San Luis Obispo County order, your landlord cannot charge late fees for the past due rent and cannot later bring an eviction action against you for rent that was due and unpaid because of COVID-19. So that means that your landlord can sue you in small claims court for the back rent owed, but cannot evict you because of it. So this is why it's very important that you document your reasons for non-payment to show that they're COVID related. Your landlord may want to reach an agreement with you now as to when the rent is going to become due and how much. I would encourage you not to rush into an agreement without seeking legal advice and without fully understanding your legal rights. Also, if you're served with an eviction notice or an unlawful detainer complaint, you should contact an attorney as soon as possible. Tenants with specific questions can call the office that I work for, San Luis Obispo Legal Assistance Foundation. We are open and handling appointments over the phone. We're a nonprofit organization providing free legal help to seniors and veterans in need in San Luis Obispo County with housing and mortgage problems. Also, low-income tenants can call another nonprofit organization, CRLA, for help. Or to hire a private attorney, you can call the San Luis Obispo County Bar Association's Lawyer Referral and Information Services for a referral. Thank you, Jim.
Thank you, Stephanie. I appreciate all that information. Financial challenges aren't just limited to renters and may be directly related to renters' inability to pay. We know that property owners are also worried about mortgage payments. Donna Lewis, branch manager and VP of mortgage lending at Guaranteed Rate, is going to share a high-level overview of forbearance options, starting with what that means, and things to consider before taking that step. Donna, thanks for being with us.
Thanks, Jim. The CARES Act provides that borrowers may request and receive forbearance for mortgage payments on eligible loans if they affirm, very important that you affirm that you're experiencing a financial hardship during the COVID-19 national emergency. So how does forbearance work? Forbearance reduces your monthly mortgage payment or suspends it completely during the forbearance period. If you qualify, you and your mortgage servicer will discuss the terms such as the length of forbearance period, the new reduced payment amount if the payment is not suspended entirely, and the terms of that repayment. Forbearance may be available to you if you have lost work due to the pandemic, you are sick and can't work, you are caring for a sick family member and therefore can't work, or if you've experienced a loss or significant decline in income due to the pandemic, such as loss of rents. What relief is offered under the CARES Act? For starters, forbearance up to 12 months, a prohibition on mortgage servicers charging additional fees, penalties, or interest during the forbearance period, a moratorium on mortgage servicers initiating foreclosure actions for 60 days or until May 17th, 2020, and a prohibition on mortgage servicers reporting delinquencies related to forbearance to the credit bureaus. Are you eligible for a forbearance request? Under the CARES Act, you are eligible if you have a federally backed mortgage loan, which is a loan that is secured by a mortgage or lien on a 1 to 4 unit residential property and has been purchased or securitized by Fannie Mae or Freddie Mac or insured or guaranteed by FHA, VA, or USDA. Note that you must affirm to your mortgage servicer that you are experiencing a financial hardship during the COVID-19 emergency in order to be approved for forbearance under the CARES Act. So how long does forbearance last? If you qualify for a forbearance, the length will be determined as agreed between you and your mortgage servicer. If you get to the end of your forbearance period and you are not ready to start making your full mortgage payment again, you can extend the forbearance period up to a maximum of 12 months total. So does a forbearance mean that you don't have to pay your mortgage? There are no free mortgage payments offered by mortgage servicers. Forbearance is really a last resort. While forbearance may be an option to help you through this crisis, remember, once your forbearance is over, any partial or paused payments will need to be paid in full. Options include a repayment plan, which is where you would pay an extra amount to be added to your regular mortgage payment until the amount you owe from forbearance is paid in full, or a lump sum payment, which would be due all at once, or a loan modification, which may include extending the end of your loan to give you additional months to pay the forbearance amount. It is important to contact your mortgage servicer prior to missing a mortgage payment so you can work with them to establish a payment solution that works for you. My best advice is to save a forbearance option until you need it most and not to request forbearance simply because the option exists. For further information, please feel free to go to rate.com/forbearance-information. Thanks so much.
Thank you, Donna. That is fabulous information. And again, once again, thank you, Dallas and Stephanie, for taking time out of your busy schedules and sharing on these incredibly difficult issues. Hopefully this is a good start and you know a little bit more about your options and the interconnectedness of each of these different players and systems related to our homes. The key to all of these challenges is to reach out to discuss your issues with the interested parties, document your conversation, and when necessary, seek professional expertise to assist you, because there can be serious consequences for taking missteps here. We will be doing a follow-up webinar with plenty of time for your questions in the near future, but if you have more questions now, let us know by emailing slowchamber@slowchamber.org so we can be sure to answer them in an upcoming video. Stay healthy and safe out there. Best wishes.